You know about Fannie Mae, you know about Freddie Mac, you know about VA, you know about FHA, you know about USDA. I'm going to tell you about some of the weird programs today.
What about them?
Hello everybody, what is my name?
Barry Horvath.
Oh, my name is Barry Horvath, and this is Moving Forward TV with your local market update.
I got your back.
I know. That was an intentional blunder, by the way.
We needed bloopers.
We do.
Good morning, everyone, and I am DeLynn Gaston, and I was going to say, we are with the mortgage firm. Wrong video.
No, we're not.
Anyway, sorry.
Listen,
it's one of those mornings.
let's try again. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local. All right.
Try again.
All right. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you for joining us today. Yay, we got through it.
Hey, we're on we're almost to episode 400, and
we should have this down.
We should, but. Oh, we're at show 362.
Nice.
Wow, nice. Anyway,
nice.
So usually
Not to mention how long you've known your name.
I know. It's been a while. I don't use it very often. It's not about me, remember. Remember, it's not about me. It's not about me. So it's all good. Anyway, this week we're going to talk about the Super Bowl. Tampa Bay Buccaneers. Woo!
Woohoo!
All right, that's our Super Bowl show, folks. Anyway, hope you enjoyed it, and we'll be back next week.
He's just mad because he didn't get to go.
I didn't. I really tried to go.
He did. He tried really hard.
I actually tried to buy tickets up to 1 hour before game time, and then I decided.
They're like 10 grand a ticket, weren't they?
The best I could find for anything that did not require oxygen to sit in the stadium. You had to buy 4 because of COVID. You couldn't buy single seats. Single seats were crazy if you could even find them. Groups of 2 were unheard of, but they did pockets of 4, 6, and 8.
And how much were those? Just out of curiosity.
For 4, the best I found was $34 grand.
$34,000
Yeah, so
for
I was
4
like,
seats. That's nuts.
should I put it in the theater room where I can watch it, or should I go to the game? And I know it's a once in a lifetime, and I'm proud of our boys, and I've been a season ticket holder since 1989. And I was happy that 7,500 healthcare workers got to go. A lot of them probably became fans of football after that. I heard they gave them their own special tent with food and drink.
Oh, nice.
And they got to go up front for the Miley Cyrus pregame show and all that. Yeah, so they treated them well, and they deserve it.
That's pretty good.
But I wish more seats were available for season ticket holders, but they weren't. That's okay. I think they gave away 2. Or the opportunity to buy 2, so it's crazy.
Did anybody get...
Actually, Ken got to go. Ken St. James.
Oh, okay.
Yeah.
That's
and
cool.
Allie got to go.
I know that. I know that. As a first responder, I didn't know if any of your, season ticket holder friends got to go.
I do not know any season ticket holders that got to go. Outside
did they?
Yeah.
You don't know.
I don't know.
So did I tell you the funny thing? So my son, who's not a huge football fan, but he a little bit follows it because his dad does. And anyway, so he said when they won the division or whatever it is, he said, "Wow, hey mom, it's the Bucks, and the Super Bowl is going to be right here in Tampa. Maybe we should go."
Yeah, maybe.
I said,
maybe,
honey, but the tickets are like $10,000 a piece. He said, "No, they're not." I said, "Look it up." So he grabs his phone and he goes, "Oh my gosh!" I know.
So face value on a seat is probably about $1,200, but they did packages with the NFL and even
all that stuff.
It was pretty.
Still, they're just not worth 10 grand a ticket.
No,
That was crazy.
no.
That was just crazy.
I was like, I'm good.
But I'm glad the
$5
first
grand.
responders
That
got
was
to go.
my threshold for paying. I would pay $5 grand to go. That was it. But outside of that, I even went 6.
For one
Yeah.
ticket, you would have done that.
I would have done that, but it wasn't there. It was not an option. And I could not find, it's hard to find friends that are willing to kick in. Hey, you got 34 grand, you want to split? Sure, Barry, all right.
Glad you didn't call me on that one.
Yeah.
Even on the 5 grand one, I'm like, my
like,
yard needs a fence. I'm going to spend my money on the fence.
I know. Anyway, we're not here to talk about the Super Bowl, but we are excited for Tampa Bay. Congratulations. And guess what that's going to do? It's going to make real estate values go up. Just my opinion. Write that down.
Right now, everything is making real estate values go up.
So something else. We get the Stanley Cup champions.
I know. We are on fire.
We are on fire. We are Tampa Bay. Anyway.
Tampa Bay, I like that.
This week, you like that?
Yeah, I hadn't heard that yet. You didn't make it up.
I didn't make it up.
You stole it from somebody, but that's good.
And Tom Brady's boat.
I like it better than Tampa.
Tampa.
Yeah, remember they were doing Tom Brady Tampa.
Yeah.
I didn't like that.
They named his boat yesterday. So, he came from New England, which, boating there is not good. So
well, it is good. It's just my husband worked at a marina. It's just up in New England.
Yeah,
it's just
good.
limited.
Yeah, from July 4th to July 20th.
8th.
Yeah.
And that's about it.
That's it. That's your good weather. Anyway, no, but he bought a beautiful new boat, and they decided they're going to call it the Goat Boat.
The Goat Boat?
Yeah. Do you know what GOAT stands for?
No.
Oh.
GTO?
No.
I know they call it GTO a goat.
GOAT. Greatest of all time. That's why they call Tom Brady the GOAT.
Wow.
Yeah, he's the GOAT.
He is. He is.
Yeah.
That's what they say. He is.
This guy has more Super Bowl wins than most teams.
And there's a
ever.
reason. He's very good.
Yeah, he is good.
They say he's the best athlete of all time, which is probably not far from the truth, huh?
Yeah. Well, I think his mental.
You can't take anything away from the guy. He is dang good.
His mental preparation.
People don't like
All
him.
right, are we going to talk about mortgages?
I know. Are we going to get anywhere? Sorry, guys. We just did a whole conversation on the Bucks.
Sorry if it was boring.
We work together, but we never get a chance to talk.
No, we didn't get to catch up, so we just catch up in front of you guys. So anyway, this week, I know we always talk about all the different loan programs out there, and you all go to your lender, and the real estate market is hot. But this week, we're going to talk about the programs you may not have heard about that are not what we would call conventional. Or
what do we call those programs?
I call niche.
I just had to have him say it.
Niche programs.
Because he makes that face every time he says it. He can't just say the word niche. He has to make that face.
They are some niche programs. Niche programs. Oh, I'm going to... Anyway, we have fun anyway. And some things you may not know existed that might help you grow your business. I know the Tampa Bay Bucks will help you grow your business, but we're here to help you too. So anyway, we've got a few of them. We want to just kind of give you general outlines. We're not going to get into super specifics on this, but if you have questions, you can always reach out to us or check with your local bank that will not have the program. Or just go online and apply, because they won't have it either. Just kidding. I'm like, boom, I don't pull no punches this week.
Not today. Not last week either. You're
I know.
On a roll
I'm really
lately.
being rough. I'm rough, I know. We're here to educate you, not sell you. So I want to be clear about that. So anyway, one of the programs that's coming up a lot, I know we did this yesterday on our little short clip, but it's really hard to find a house right now, and sometimes you need to make exceptions on what you're willing to look for. And,
right.
And this program will help you because maybe there's something wrong with the house where the seller doesn't have the funds or the resources available to fix a program. Oh, don't mind us.
Sorry.
We'll get back to you later. Anyway, and it happens a lot, sometimes you'll have specifically, I want to say, a roof problem with a house where it will fail inspection, or there's, FHA requires 3 years of life expectancy on a roof and you don't have it, or maybe a lot of people don't take into consideration, what I've seen, like to get insurance on a place, on an older roof, like the insurance premium is huge. Everybody's all like, oh, rate, what's your rate? What's your rate? And they don't care that the roof is 23 years old.
Right.
And it's never been replaced, and the insurance premium is an extra $200 a month. how does that even make sense? You know, by putting a new roof on the house, you could literally, you know, they put the new hurricane straps on it, they put it to the current codes, and your discounts on the roof, and talk to your insurance agent, can be substantial with a brand new roof. So keep that in mind. And the program I'm talking about specifically right now is called an escrow holdback. And DeLynn, I know you love this program.
I do. We've done several of them, actually. So just in short, how the program works basically is, you know, as Barry said, if your seller, you know, we all know that you know, from the home inspection or whatever, the roof is kind of questionable. So you as the buyer's agent want to get your buyers a new roof, and the seller unfortunately doesn't have any money, and maybe that's one of the reasons he's selling his house. He's downsizing or whatever it might be, and he doesn't have the funds to put the roof on prior to closing. So what we do is but he is willing to pay for it out of the proceeds. Maybe renegotiate the price if it's going to, you know, appraise higher than with the new roof. Then, you know, we can work things that way so that he gets a little bit more, and everybody's happy at the end. So at the closing, they withhold the funds for the new roof. We close the loan, and then usually within the first 2 weeks of the people owning the home, the buyers owning the home, then the new roof is put on the house. And at that time, the lender, will pay the roofing company in full for paying that. And if there's any money left over, because it's all based on the quotes up front, if there's any money left over, then that will automatically go to the seller. That's just the general of how it works, and that's a way that we can get the buyers into the house without the seller having to, you know, come up with money for a new roof, and without the buyers having to come up with money for a new roof.
And we're basically leveraging the equity that's there. It's win-win because...
Happy buyers, happy sellers.
Yeah, and happy realtors, because they get paid at closing right away. You don't have to wait. We close on the loan, and we actually can base the insurance on what it's going to expect to be.
And the appraisal gets based on after the new roof.
So can the price be raised because of this? Absolutely, because the appraiser does go back out, so it is subject to that inspection on the roof after. Now, here's the cool part about the escrow holdback. It doesn't have to be just for a roof. It could be for an air conditioner, another expensive item. It could be for an electrical panel. You know, so for those of you, we've been seeing them a lot lately, have those old Sylvania or Zenco, is that the other one? Zenco?
Yes, I think you're right.
Yeah.
There's like a list of 16 of them, but those are the popular ones.
And you might say, oh, that's no big deal. That's $1,300. Well, maybe a seller who doesn't have $1,300 to put it in, or they don't want to risk putting it in, not knowing if the buyer's going to close, because none of this happens, understand. They're not going to lose their money if the file didn't close. So not that we are ever anticipating that, but everybody's protected in this transaction. And there's other things that can be done in an escrow holdback, and it's a case-by-case basis for approval. Allow a little extra time for this, obviously, because it is a separate, you know, another approval process, but maybe a few more days. It's not like a major thing.
And actually, for all of these that we're going to mention, allow extra time. These are not your basic Fannie Mae, Freddie Mac, FHA, or VA loans. These are going to take a little bit more time. The niche products.
So anyway,
next one.
I'm going to skip the next one and go on because it goes hand in hand in what we just talked about. So sometimes the house is in total disarray, and maybe it needs a lot of repairs. Hi, DeLynn.
Wrong way. There you are.
Well, you know what? We're totally confused today. It's been a rough morning. It's post-Super Bowl.
Take a sip of coffee.
Yeah. So the other program that may be helpful to you if that house needs major underdoing, where we can do the full or the partial, is called a 203K. Now, we also have, is it Freddie Mac's we have as well, which is similar. 203K is the FHA product, but there are conventional products as well. And what it basically does is it allows the buyer to then have remodel work done. And there are
finance and the costs of that remodel work.
Yeah, so we are basically going to finance in the costs of that remodel work. Now, there's reasons to do that or escrow holdback. When, you know, 203K is more for when you have multiple things to do. and the work does need to be performed by a general contractor in these cases. So
no sweat equity allowed.
no, you can't say, "Oh, I'm going to do it." No,
And you can't even say, "Oh, my dad's like, a handyman. He's really good. He's retired. He's going to do all this for us." Nope. Has to be a licensed contractor. And we have to have, full written estimates with obviously insurance and bonding for the contractor who's doing it. And there's lots of inspections. But on the cool side, you can even put on an addition if you want. We even had a client do that one time. They put a whole 800 square foot addition on
Yep,
the back
I
of their
remember
house
that.
or something. Yeah.
I remember that.
So that's allowable too. So
That's on the full rehab product, not. There's a
On the streamline.
There's a
There's two
streamline
products
which
for
is
it.
like 35 grand or what.
if you're afraid of FHAs anyway, yeah, you're not going to like this program at all. Just saying. We're just telling you that these things are available. We're not saying these are very difficult programs to do in that they're not your basic programs. So if you're not used to doing these kinds of things, they're not really difficult to do, but they're definitely time consuming and not like any ordinary program. So you just have to be willing to go with the flow on these.
Yeah, you need a little extra time on that.
A lot of extra time on
we're
that
relying
one.
on.
That one's probably an extra 30 days.
Yeah, we're relying on contractors' bids in this and
And we have to prove the contractors first.
Yep.
FHA does.
make sure. Then you need a HUD inspector. So they're not complicated. They're
Right.
just time consuming. So yeah, definitely allow. That's probably a 60 to 75 day contract minimum, I would say,
Right.
on the 203K rehab or any of the rehabs. All right, another niche program that we have is
Construction. You want to go right to that one?
Sure,
'Cause
we'll
it's
go to
along the same-
construction.
It's along the same
because I know
lines.
you used to be a construction guru. Did you hear that pin drop?
Construction guru in that I built a house once. We'll never do it again.
Yeah. So we can.
Another thing that is not always the easiest thing, and you have to have a lot of patience with these types of loans.
And again, construction perm, as we call it, right now, before we only did the end loan, meaning the builder held the note, and then we did the end loan. Now we can also do the complete construction of perm project, meaning we finance the project from the beginning to the end, and it is what I would call stage type funding, where there's contractor draws, requires contractor approval. Some people buy the land first and use that as their down payment, as equity. We can do that. It does require certain credit score. So again, with limited housing right now, you're going to see more of that going on with new construction, and we can help you with that program. So we do have it available, and a lot of the builders, your bigger ones that are cookie cutter, are just holding the note and saying you sign the contract with down payment. But this is for those that are working with a smaller or a custom builder, and we can help them with that financing. So it's out there. Next one we want to talk about is maybe a bank statement program. This
one we get a lot of inquiries about.
Yeah, definitely. So as we all know, when Dodd-Frank came out, that law came out and said that the borrower must prove the ability to repay. It's so
Which
funny.
means prove their income.
Prove their income.
No more of these, do you have a
Stated-
pulse, you get a loan.
Stated income.
Yeah.
It's so funny. Every once in a while, people call me and say, "Do you have a stated income
Yeah.
program?"
Do you have one of those no income verification loans?
Yeah,
No.
there's no such thing.
There's no such thing
There
anymore.
are
They're
hard
gone.
equity loans
And
on
that's a
investment
law.
property. Yes, but there are no such thing as stated income anymore. This is a bank statement program where we can take personal and or business bank statements, count their deposits, add them up. It's really for people who take extensive write-offs on their tax return, and it might help them.
And that's what I was going to say. So because when we are underwriting a file for Fannie Mae, Freddie Mac, anything like that, yeah, you drink coffee, I'll talk for So when we are underwriting a file like that, obviously we look at the tax returns and such. Well, so many self-employed people, because they're allowed to take a lot of deductions or,
Even if they're not allowed to.
sometimes even if they're not allowed to.
Did I say that
They
out
take a lot of deductions. So they might have made $300,000 that year gross, but then they wrote off $250,000 of it.
Right.
Well, all we can qualify them with is $50,000 per Fannie Mae and Freddie Mac and FHA and VA. That's the way
that's just
everybody
law.
underwrites that under the normal housing underwriting guidelines. Under this program, we don't even look at the tax returns at all. all we do is look at their bank statements. Sometimes for the last 12 months, sometimes for the last 24 months. And what we're going to do is we're going to add up the deposits. So, most of the time, let's just take a barber, for example, a self-employed barber, something like that. He might write off all of his things on his expenses and everything, but on a bank statement program, he definitely deposits his money, and a lot of it is cash too, which again, they don't really care about because they understand that. So we just add up the deposits and we can underwrite off of that, which is very good. We do have to have also some expenses as well, but they're not going to look at it as close.
We do have to show they have enough available after expenses too. So it's a good niche. I mean, the rates are different, obviously, than your conventional. You're not going to get your 0.75 interest rate that everybody's claiming to get right now. That doesn't exist anyway.
Somebody said to me the other day that they have a lender who quoted them like 1 in an 8.
Yeah.
Like, no, you didn't.
Yeah. You know what? You can get any rate you want, folks. You can buy down a rate. They're called discount points, so just keep that in mind. So,
you want to pay points, you can get any rate you want.
All right, let's talk about another niche program out there called the bridge loan. I know, DeLynn, you love this loan. So a bridge loan is quite simply, you are looking to buy another house, you have substantial equity in your current loan, and you want to use the equity in that current home as down payment in the new property you're buying. And there's pros and cons to it, but it does exist. We do have it. These, again, niche programs. So if you want to do something like that, we can help you with it. And it's just another option for our buyers. And the reason you want to do it is some people don't have the money saved, but they have a lot of equity in their current home. Mm-hmm. So there's opportunities for those type buyers as well with a bridge
It's basically
loan.
letting you tap into your equity for the new house prior to selling the old house. Gives you a little bit of time. We're actually doing quite a few of things like that right now, people moving up, which is good because people need to be moving up so that we have a lot of first-time home buyers trying to move in.
Yeah, or we have people moving down too. I just got a call yesterday, someone that's downsizing. They want to go from their big house to
something smaller.
Like a villa maintenance-free type thing because they don't need that big space anymore, which I get. I mean, who wants to take care of the lawn?
I know. Not me. This means not it in our world.
Yep. So bridge loan is an option for those type people. And then we have down payment assistance programs out there for those who have no money. They come and go, I have to warn you. Meaning
especially since COVID.
Yes. You need to watch because what we tell you today may not be here tomorrow. Right. We do have our own in-house program. We call it Genoa.
Right. So the ones that are available before we get to ours, so is the Florida Bond Program. They do still have some funds, I believe. They're changing things all the time. Guidelines, minimum credit score requirements, maximum income limitations, things like that. Then there is the county programs. Each county, not all counties, but I know Pinellas has something, Hillsborough has something, Pasco has something, Hernando has the SHIP program. But a lot of those were suspended since COVID happened. They are a little at a time starting to come back. I know Pasco's not back yet, but they are anticipating that they will be back hopefully in the not too distant future. Right now, I think the housing development offices in the counties are kind of all focused on let's keep people in their houses who, unfortunately due to COVID, lost their job or that kind of a thing. So a lot of them are working on some of those programs, which we participate in with our nonprofit as well. So we're not sure if they're going to be available.
And the one thing I'll caution you, the programs are there, but if you can get a gift for down payment, like FHA requires 3.5% down, 5% on conventional, there isn't a 3%, you may be better off because I'm going to tell you.
You're way better off.
Because
in
the
most
rate
cases.
you get on that program, you're going to pay for it over time.
Even though they say, oh, there's no money, you don't have to pay it back after so many years. That's because they charged you such a high interest rate.
Yeah, it is.
They more than got their money back. Trust us.
It is definitely higher. it is definitely higher. But if that's what you need to get into the house, there
programs
are
are available.
programs available.
And we have one ourselves. It's called Shanoa, as Barry said. It's
Shanoa?
in Shanoa.
Shanoa.
Yes.
Shanoa.
It's in.
Is it like niche?
It reminds me of like an Indian name or something, you know.
I wonder what.
Isn't it?
Yeah.
But anyway, so that is something that is an option as well, where we give like a 4% second mortgage loan, which is what most of them are, and then a 97% first mortgage loan. So you get your 3% down payment as well as 1% to put towards closing costs and things like that. So it is a
pretty cool
niche
it's
product.
A niche product. I like the niche products. Boy, we have lots of them. I mean, we covered a lot. We talked about escrow holdback. We talked about bank statement programs, 203K rehab, construction perm loans, bridge loans, and Chenoa. All niche
Down payment
programs.
assistance, yeah. Exactly. There are some other things out there, but as we said, on all of these loans, please, please, please do not give us a 30-day contract.
Yeah.
These things are available,
whoa. On every loan, please do not give us a 30-day contract right now.
even on the regular loans,
Yeah,
because of the
don't
volumes
do
right
it.
now, it's hard to hit those 30 days. So most loans are taking somewhere between 30 and 40, I would say,
Yeah.
is kind of where we're averaging anyway.
So
30 to 40 are
35.
files.
I think we are.
Days, that is, 30 to 40 days.
We are way below the nationwide average with our company, way below.
I know we are. We're definitely way below even our local area. I know a lot of the banks are at a much longer turn times than we are.
Refinances are
Yeah.
crazy. So, people talk about, I get a lower rate, but if you got to wait 90 to 120 days, think about that.
How much money did you
How
spend on
much
making your existing payment?
That $200-300 a month that you saved, you just lost it because it took you 4 months to close it. Use your head, people. Come on, think about it. Sorry.
Give us a call. We can help you.
So anyway, let's talk about our upcoming Lunch and Learn.
Yes.
March 9th, we do have our county property appraiser coming on. Our new county property appraiser, Mr. Mike Wells, will join us. It is via Zoom. Check out the links for that. You can get it on the Mortgage Firm Trinity page. You'll find it out there.
I've already liked what he's done with the page. It looks good.
They cleaned it up again.
They did. They cleaned it up again, and it looks nice.
It
The
keeps
property appraiser
improving.
site.
It keeps improving. So it's definitely
Still one of the best in the country. I've got to tell you, we get loans from all over, obviously.
ours is the best. We
Ours
have the
is
best.
absolutely the best website.
So join us at 11:30 on March the 9th. You can jump on via Zoom. We'd love to have you. We generally get a ton of realtors and home buyers that want to come on and join us. So
Bring
put it
your
on
questions.
calendar.
Mike
Yep.
loves answering questions.
And bring your realtors. So anyway, thanks for watching. We appreciate you guys. I'm having a hard time talking today, though.
Like us, share us.
Yeah, get us out there. Like it, share it. We're all over.
Thanks all. We are today and every day.
Moving forward.
See you next week. Bye-bye.